Hello again, everyone. Lynn B. Thurgood here, Oxford Wealth Advisors. This is our Oxford live session, and this one's going to be a bit longer today, so bear with us. We're calling this our State of the Markets presentation. Going to review a little bit of 2019 and talk a little bit about what to expect in 2020. So happy to have you here, and we're just going to share some good information with you. As always, we need to do a disclosure. So there's the SEC requirement about who we are, what we do, and we'll leave it at that. So how did stocks perform in 2019? We're going to just talk a little bit about that, and what drove that performance, where we are today, and what do we anticipate, and what are the experts saying about this wonderful year of 2020. How did stocks perform in 2019? We have this chart here that shows kind of what all of the experts were anticipating from the S&P 500 last year, and they were pretty close. They did a pretty good job. A few of them are a little pessimistic, but overall, they pretty much were close to what was expected for 2019. Of course, we have to remember that in the end of 2018, the last quarter of 2018, we had about a 20% drop the last quarter of 2018. And so a lot of the growth in 2019 of almost 28, 29% was recovery, really, from the last quarter of 2018. So while you look at 2019 by itself, it looks very good. Just don't forget, losses kill portfolios. And we did have a significant loss at the end of 2018. But we're happy about the growth, and let's talk about kind of what to look forward here in the future. Now, what drove some of the activity last year? We had President Trump and tariffs. I mean, it seemed like every 3, 4, 5 weeks there was a new tariff here, a new tariff there, a threat, et cetera, et cetera. So those things all had various impacts on the markets, and through the end of last year, we don't, we see that continuing on. So when we look at this chart, this is discussing the growth of the S&P 500, quarter over quarter. And so I just wanted to share that with you just briefly. Not a whole lot I want to say about that, other than, things are looking fairly positive. There are expectations that we'll have some continued growth into 2020. And even perhaps into 2021, we are expecting a deceleration, meaning that the earnings is probably not going to be anywhere as much as it was in 2019. And again, a lot of that was the recovery from the 2018 dip. All right, so here's our indicators that are from all of the official agencies. So they're looking fairly positive. Slow, steady growth, strong market in labor. Confidence continues to rise. So, the report card looks pretty good. So where are we today? Let's take a look at what's ahead of us and what's behind us. Looking back in 2008, this is what the economic and financial indicators looked like. Red is not good. And you see a lot of those indicator dials were red. And of course, we all remember what happened in 07, 08, and that was a significant market correction. So that's what it looked like about 12 years ago. And here's entering 2019, what those indicators looked like, again, having experienced a dip at the end of 2018. So 2019 looked pretty positive. Most everything was green, and yellow is kind of, caution. Red means, warning. And we like red, yellow, and green, just like we talk about money, red, yellow, and green. So coming into 2020, this is where those dials are. A little bit more yellow, and still quite a bit of green, and a few red dials, and then red is all political, as you can see from the chart. Okay, so still some positive opportunity there. The leading economic indicators are looking positive as well. And that ranges from stock prices to manufacturing orders and everything else that compiles these economic indicators. And we're showing modest growth that should continue into 2020. Recessions have never started when the leading economic indicator is increasing. But again, past performance does not guarantee future results, but it gives us some positive energy. So, business cycle, slowing global growth, these are all things that are to be looking forward to. We see several headwinds in the markets that could be against us in the year ahead. Here's some additional things to pay attention to. These are things that are kind of maybe pushing us, tailwinds. So the headwinds, now tailwinds. What's behind us? What's giving us some energy? And there's some categories there. 2 points to make on these. The Fed has indicated that it may pause on further rate cuts. They had the rate cuts in 2019 that may take about 6 months or more before we really feel them in the economy. And then corporate profits, corporate earnings had high hurdle to clear in 2019 compared with 2018. And going on to 2020, corporate earnings is set at a much more modest bar than what the 2019 was. So, all right. Now we're looking at this chart to see if stocks are fairly valued. And the most common way to look at that is the price to earnings ratio. If you look at the dotted line in the middle, you can see that the PE, the price to earnings ratio, for the last 25 years on average is about 16.22. You can also see that that moves around quite a bit. It peaked during the dot-com boom, and then it troughed during the credit crisis. So, as of September 2019, we're about where we are for average in the price earnings. So, positive energy, growth opportunities are there. So what are we forecasting for 2020? Inflation is important to pay attention to. Rising prices impact the entire economy. Too much inflation hinders growth, and too little can cause other issues. So there are some inflationary pressures. Rising labor costs is the main one. But the long term suggests the Fed's doing a pretty good job of managing inflation. Unemployment and wages. You can see on the chart here that unemployment is really low. I mean, it's closing out the year right at about 3.6%, which is just very, very strong. Lots of good employment. Deceleration in layoffs. So we've got a healthy labor market. That good employment and higher earnings makes for a healthy consumer, which is a good sign for economic expansion. So we'll see. We'll see how things continue to develop there. Here's our forecast from some of the main firms out there on their feelings about how are the equity markets going to do in 2020. And again, you'll remember from last year that the average was about on target, a few a little pessimistic, a few optimistic. No one knows for sure, and that's just it. It's predictions, but they do show that for the most part, Wall Street remains cautiously optimistic. Now, a lot of information's been covered. There'll be a quiz tomorrow on what we've been telling you. Just kidding. There is one takeaway here. It is that the path the market takes is never a straight one. Even in a very good year, the S&P 500 can suffer substantial declines. But for the patient long-term investors, stocks have shown themselves to have been excellent means for growing wealth and helping you pursue financial objectives. So two specific examples. Look at the series of positive annual returns between 1995 and 2000. See, quite a few positive returns in that 5-year time frame. And each year had some intra-year declines, but overall it was a very positive year. Then the bull run following the credit crisis, a bull market which is now over a decade old, saw multiple years in which intra-year declines were double digits. Those are those little red dots. So even during growth periods, you do have some declines during the year. And so what's the lesson? The lesson here is that you may harm yourself if you react to short-term drops. So the best decision we feel for our investors is to pursue those goals based on the time horizon, risk tolerance, using the active management strategies that we provide, and of course, incorporating a good, healthy mix of green money, where there's no risk, no fee, no worry, and then our yellow money, low risk, with active and tactical strategies to lower those downside exposures while still preserving the upside growth that we all look forward to. So, steps for you to take, just keep us in the loop with important life changes. We like to hear from you and make sure that we're up to date with changes that occur in just life. Tell us about any concerns you have regarding those investments. We're always here and happy to have that chat and provide discussion and information that we can share with you. We want to be a fiduciary relationship with you, and that is that we do what we do in your best interest. Let's make sure your legal and financial documents are up to date. We always encourage that. And, we're going to continue to keep you informed through regular communication like OWA Live. We're going to do what we can to keep on top of the management of those investments according to what we've discussed. And, of course, as always, we like to stay on top of what's going on in the market and make sure that we make adjustments as necessary that are prudent for you. So, until next time, we wish you a happy and a healthy beginning of the year. Spring is around the corner, and we're looking forward to the opportunities that lie ahead. Let us know if there's any questions that you have. You can click on the link below to submit questions, and feel free to call our office at any time to have a chat with one of our advisors. We appreciate you and wish you all well.